Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up half.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Becky quick. While the average man looking at it's sad like she fine as it. I'm over here looking at tails and whips like, yeah, 5'6". Yeah, I left the mayhem for the market. Now I don't want a dope spot, I want a stop pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-Wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, outside, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas.
Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs, making profits. I jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits.
Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off.
Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them make profits. While I'm still in my same making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF.
Hey, my family. Hey, go, what we doing, my man?
And make profits.
Hey, Suge, Mike, what we doing, dog?
And make profits.
Yo, Wolf, Professor, what we doing?
And make profits.
That TTG money gang,
And making profits.
we some snipers.
Hey yo, what's up everybody? What's going on? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you were unaware, we were the Benzinga FinTech Chairman's Award recipient for the best AI analysis tool last year. If you are looking for AI analysis tools, chatbots, whatever it is you want to call it, trading assistants, look no further. No one's got that award except for us. Nice to see industry leaders like Benzinga recognizing True Trading Group for what it is that we are doing with implementing AI technology into our platform to help make our traders better traders. And by better traders, I mean more profitable traders. There's my business partner and I up on stage in New York City receiving that award just a couple of months ago. But True Trading Group is not just about awards. It's about being the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here. At True Trading Group. So if you guys are wondering why it is you should listen to anything it is that I discuss on this channel, it's not because I think that I'm the world's greatest trader. It's because I was trained by professionals on Wall Street. My first job out of college working at T3 Alpha Fund in New York City, where they did not let me touch $1 of the fund's money until they had me go through their training program. That's where I learned how to become a trader. And then 2008 happened, Great Recession, big stock market crash, but also the same year I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and head trader of True Trading Group, along with my team of 8 other professional full-time trading mods and an over 30-person staff. We've helped thousands of members from all over the world reach their goals. We've got 10,000 members in 115 different countries. We must be doing something right. Okay, so if you guys are ready to learn, trade, and profit for real, you guys are coming to the right place. 6 nights a week, Sunday through Friday, we go live on this YouTube channel with myself, other mods, and even some special guests sometimes. We'll give you guys free lessons, education, trade ideas, market commentary, analysis to help you guys make money. It's exactly why you're all here on this YouTube channel now. It's why we all participate in the markets, is to accomplish that goal, and that is to just make money. So if you've not yet done so, smash that like button, show some love, subscribe to the channel. Again, turn on your notifications, make sure you guys never miss out on any of these live streams. Let's get right to earnings. We got a couple of earnings on deck here. ISRG, CSX, Twilio are a couple that we are getting coming out here right now. I'm just going through to see if there's any others that I think are of significance. Oh, and then Texas Instruments. So let's go through them, guys. Let's go through kind of the earnings that we just got. Like I said, it is the start of earnings season. So let's kind of start to go through it. Texas Instruments, little semiconductor that's been doing okay. Not not necessarily in that same category as that's the super high growth type of semiconductor name when people start to think about those. But the stock has done really, really well over the last decade. It feels like it's kind of gotten stuck in the mud a little bit these last couple of years. But let's go through some of those earnings as the stock is now trading down 2% on the day, down more than that after hours, from that after hours close. They beat on earnings per share. They also beat on sales. $1.30 versus $1.20. Sales $4.01 billion versus $3.87 billion. Their outlook for revenue in the range of $3.74 to $4.06. That's versus $3.874 billion estimate. Earnings per share 94 cents to $1.16 versus $1.17 estimate. And they now expect our 2025 effective tax rate to be about 12%. The company actually in their earnings report talking about expecting a change in their tax rate. And that is giving you, it looks like they did miss on their earnings per share. Maybe that could be the reason why the stock is trading to the downside, but not a bad earnings report, not an amazing earnings report, but certainly not a bad one. And the stock is just trading down 2%. 2% on the day, and you're just kind of stuck within this choppy. I mean, this is choppy. And take a look at this chart. I mean, just look at this kind of just, I don't really see there being a trade here. I also don't necessarily feel like Texas Instruments is a good day trade or swing trading stock. So is it important earnings to kind of look at and kind of gauge, give us a hint towards other semiconductors? I'm going to also say kind of not really. I don't think it's all that important. And you're getting, I don't see a chart set up here that I think is worthy of a particular trade. So let's just kind of keep things moving. Now, CSX, this is a little bit different. CSX, the reason why I like CSX is CSX is a railroad transport. And they give you some really good insight. It gives you some really good insight into the health of the economy and the transportation of goods. And their earnings per share were in line and their sales missed. So earnings per share were 42 cents. That's what was expected. But their sales came in light, 3.54 billion. Analysts were expecting 3.576 billion. So a little miss there with the railroads. Now, they did cite some issues that affected this, which was hurricanes, the damage with hurricanes. And they also cited with some stuff that happened with their transports when the bridge in Baltimore was destroyed. So they kind of said, cited a couple of very specific instances on why things could have potentially affected their earnings. Also, not a day trade or swing trade stock. The stock's gone sideways for the last 3 years. 4 years, really. I mean, you go back to 2021, the stock's in the exact same place as it was in 2021. It's crazy to think 2021 was 4 years ago. That's crazy. It doesn't feel like that. It doesn't feel like that. But that's CSX. Then you have ISRG, which is the one that I'm the most interested in because I own ISRG in the long-term portfolio. It's been a phenomenal position for us as one of our healthcare names. We went ahead and began buying into this position in, I think it was 2022, if I'm not mistaken. And the stock is up, triple digits since. I really like this company. It's a medical device company. They have a robotic surgery technology that is just continuing to, get into and work for a growing list of a variety of specific surgeries. And now with the implementation of AI technology, there's a lot of bright future there for this medical device company. And they broke out to a new all-time high. Okay, right here, they broke out to that new all-time high in the very beginning of 2024 and then pulled back in to reset against that previous all-time high. And the stock has not looked back since. You guys can see this is a weekly chart. So you can see this very nice strong double top from the all-time high, triple top all-time high 2021, then double topped it in 2023, broke through it in the beginning of 24, retested it with the pullback, and then the rest is just absolute history for ISRG. So it is just unbelievable. Oh, you did? Siamese Sia had actually surgery. It's the Da Vinci. Yeah. So that's what they call their robotic arm. It's called the Da Vinci surgical. I mean, whatever, it's Da Vinci, whatever. That's what they call it. It's the Da Vinci, and it's just been something that I've been bullish on for the last couple of years, and it was the right call. Glad we own the stock. Let's talk about the actual earnings, though. The stock is trading slightly to the downside. I honestly think, though, that this is just kind of profit taking. The stock recently exploded here on the 15th, and that was because of a competitor's earnings, which is Medtronic. Medtronic is another medical device company. They had a good earnings here on the 14th, and that gapped the stock up. And I feel like ever since then, ISRG has been kind of just following along with that earnings. So I think that's kind of what you're seeing there, and a nice little pop. And now it's just, even though they came out with their earnings, I think it's just a little bit of a profit take on ISRG. So let's kind of go through them. $2.21. That's a big beat against $1.79, and sales were also beat 2.41 billion versus 2.25 billion. Worldwide Da Vinci procedures are expected to increase between 13 and 16% year over year in 2025. They are expecting profit margins to be 67 to 68% of net revenue. That is actually slight. That sounds really good. It's actually slightly down from last year. Last year, their gross profit margin was 69%. So they're expecting this year 67 to 68%. Perhaps maybe that's why the stock is down 2%. I think it's more just profit taking. I think the fact that they're going to grow the amount of surgeries, the amount of procedures that their Da Vinci is going to actually perform, they're going to grow that by 13 to 16%. I think that's going to offset the 1% drop in profit and gross profit margin, but we will see. I like the company. The stock's probably a little expensive after the big rally that it recently has had, but I do like what we're seeing there. Continuing on, Boeing actually just pre-reported. I don't think Boeing was scheduled to report today. I think we just got an early report from Boeing. You guys, Boeing is moving around here a little bit. This is a recent, really nice trade, actually, inside of True Trading Group. One of our moderators took a trade here long, actually, the last couple of days. I believe just kind of sold out of that position, though, I think yesterday or maybe the day before. But we're actually able to capitalize on this move that we got right there. It was a nice one for us inside of the TTG fam, inside the TTG community. Yeah, they pre-announced. Yeah, guys, Boeing pre-announced. So Boeing is heading to the downside right now as they just announced their earnings. They were not scheduled to release their earnings today. So this is a little bit of a surprise. Yeah, these are not good earnings. Let me see and get this. Actually, they're just covering it right now on CNBC. Yeah, so they're supposed to announce next week, but they came out with a pre-announcement. All right, guys. Yeah, not a good earnings announcement there from Boeing. That stock is now trading to the downside a little bit here in the after hours. And, you know, we closed up here around 178. We just dropped to 171.50. They're talking about the struggles with their defense business. So they are a defense contractor too, right? So Boeing actually gets a nice chunk of change, a nice chunk of revenue from government contracts when it comes to servicing the military and providing the military with specific equipment. Just trying to bounce here a little bit. I actually think that Boeing could have a decent year this year. The stock was so hated for so long. It had such a horrible couple of years. And just when things looked like like they were turning around, they got hit again with just more disasters. You know, the door that blew off, the landing gear that didn't work, and a plane that crashed. And it was just one piece of news after another, and the stock just couldn't get out of its own way. They actually then, moving on from their previous CEO, investors calling for like a culture change at the company. And I think that's really what's needed. I think there really needs to be a culture change at the company to focus more on quality control and bring in new management and a whole new attitude to kind of get things turned around. The earnings per share were negative $5.46, and revenue came in at 15.2 billion. That is against a 16.27 billion expectation. Oof. Yes, they're about $1 billion off. 15.2 versus almost 16.3 is what was expected. Yeah, and a loss per share of $5.46. Not good. Not good numbers. Not good numbers for the company. All right, but kind of a muted reaction, to be honest with you. I mean, those are not good numbers, but the stock's really not down all that much. I mean, I know we're flat on the day, but we are down from the after hours print of 178 to down about $4, but it's not the end of the world. I feel like that could have been a whole lot worse. They still anticipate first deliveries of the 777-9 new aircraft. They expect those deliveries in 2026. Commercial airlines report 4.8 billion of operating margin. So anticipates deliveries of the 777-9 in 2026. Yeah. All right. So that was a little bit of a surprise there. Everyone expecting that. This week is not as busy of an earnings week as next week. Next week and the week after that, that's when you guys are going to start to get the bulk of the S&P 500 reports over the course of the next 2 weeks. That's also when you're going to get your big mega caps, Alphabet, Apple, Amazon, Microsoft, Meta, right? That's when all those companies are going to come out and they're going to start reporting between next week and the week after. You'll have some semiconductors thrown in there as well, some software companies thrown in there as well, some cybersecurity names get thrown in there as well. So you're going to start to see the bulk of the S&P over those next 2 weeks. Perfect timing because the market's at all-time highs, right? Market is sitting there at all-time highs, and we actually did make a new all-time high today, both in the S&P and in the SPY. Your previous high print on the SPY was 609.7, 609.07, and the high today was 609.75. And a lot of people are asking me, like, well, what happens now? Like, where do we go from here? Because I literally on this YouTube channel just the other day, or just yesterday, and even again this morning, was saying that I don't think that we're just going to plow through this resistance level. And we got right into it today. You can see we're into that resistance level today. And, I still don't feel like we're just going to plow through it. If we do, I'll be wrong. Like, I don't think we're just going to do this. That's what I'm saying. I don't think that we're going to do. I think it's actually possible that you could get tomorrow where you actually you might even gap down tomorrow, and you might get a candle that looks something like this. I think you might even gap down against today's high. Like, a lot of times, this is just experience speaking. When you have times when the markets are right at key resistance, key levels, and then all of a sudden you get like this parabolic move into the close, sometimes that just becomes a little bit of a trap. And then what will happen is over the course of, the overnight future session, you just kind of do this and like kind of drift yourself to the downside and then like open up somewhere back down here, and you get this little gap down open. And then that can leave us with a nice little red day tomorrow and leave us with an open gap that is tradable against. So I actually think that that's what we might see tomorrow. I think tomorrow you might see something that looks like this. Okay. I think you might see something that looks like that tomorrow. Right? So, yeah, Calvin, I'll talk about that. I know there's a lot of buzz going around social media about this Bank of Japan interest rate, and everyone's like, oh, is this going to cause another August 5th? I really don't think so, man. I really don't think so. August 5th, which was this huge, massive gap down, this was the Japanese yen carry trade blow up that everybody was freaking out about. And that trade got unwound when Japan raised interest rates, because essentially what the Japanese yen carry trade is is because interest rates have been zero in Japan. You would borrow yen, and then you would convert the currency or invest the currency somewhere else to realize interest on it. And there was a spread to be made there because the interest rates were so incredibly low on the yen or in Japan. So you were able to borrow in yen and invest in, let's say, for example, US dollars and capture a spread. And as Japan raises interest rates, that spread goes away and that trade falls apart. Now that trade has worked for many years, and a lot of traders got caught off sides when Japan hiked rates, and that caused an unwind of that trade. And these are very large trades. This is not something retail traders are doing. There's not a single retail trader that's got a Japanese yen carry trade on. They're all they're all professionals and financial institutions, and they got caught. And you leverage that position up huge because the spread is so small. You're talking about like making a couple of points, so they'll leverage that position as to the teeth, so that they can actually make a decent amount of money on it. But then they got caught off sides with all of that leverage on August 5th, and that caused the haywire in the markets and the big gap down. We were buyers in our long-term portfolio on August 5th. August 5th was actually our most recent add in our long-term portfolio. I bought all of my favorite stocks on August 5th. I bought Apple, Amazon, Meta, Microsoft, Amazon, Palantir, Kava, NVIDIA, Broadcom, Palo Alto, CrowdStrike, right? I mean, I Datadog. I bought all of these stocks, AMD. I bought all of these stocks in August. So it was the perfect time. Honestly, it was the best. It was the best buy that we've had, or was the best opportunity to buy in the last 6 months easily. And we kind of got the dead bottom of this thing on August 5th. And that was because Japan raised interest rates. Now everyone's wondering, is that going to happen again tomorrow? I don't know if that happens again tomorrow. I really don't think so. Even if Japan doesn't raise rates, then it doesn't matter. But if Japan does raise rates, do you get another situation like that on August 5th? I don't think so. If there's really that many traders that are still that leveraged on that trade, and it's still such a one-sided trade, I just can't imagine that is the case. These people aren't stupid. Like, if they got caught on August 5th, you think they're going to continue to leverage themselves into that position, knowing that the Bank of Japan is embarking on a rate hike cycle. They're going to unwind that trade. They're not going to continue to add to it. So like when I see these people on social media, they're talking about, oh, but the Bank of Japan is going to raise rates and then everything's going to break. Well, do you think that nobody thought about that after August 5th? August 5th was the surprise. That hike by the Bank of Japan is what caught people off guard. It's not a secret anymore. It's not a surprise anymore. I would be very shocked if the Bank of Japan raised rates and the markets did this tomorrow. I would be surprised if that was the case. I just don't think there's that many people that are caught off sides anymore. I don't think there's that much leverage that needs to be unwound from a hike from the Bank of Japan, unless the hike is like this massive hike that nobody foresaw happening. Maybe there's an adverse reaction to it, but I just don't see it. I don't. Maybe I'm wrong. And if I'm wrong, I'll come back on here tomorrow and we'll talk about the Bank of Japan. We'll talk about the yen carry trade. We'll talk about what the Bank of Japan actually did. And if it creates another opportunity like that, I mean, listen, I hope that it does, because I would love to buy some more stuff. So you want to give me a pullback in the market because of the Bank of Japan raised rates after having rates at zero for the decade. I would welcome that volatility in the market, because that's not something that I think is going to cause any type of a severe crackdown or meltdown, like a lot of the talking heads on social media trying to scare you into thinking that that's what's going to happen. They tried to do that to you on August 5th. You remember that all the people on social media were talking about this Japanese yen carry trade, and the futures market was going down Sunday night. And I had just gotten back from the hospital 2 days ago, because 2 days prior to that, well, my daughter was born July 30th. The Japanese yen carry trade blow up gap down was August 5th. And I had just gone back from the hospital like August 3rd. And I'm like, and obviously I said to my wife, I'm not gonna work. I'm not gonna be in chat. I'm just gonna focus on, family time, me, you, the baby, and just, be there for those first couple of weeks before like getting back into the work groove. But I saw this happening in the futures market on Sunday night, and I'm sitting there in bed, and I just said to my wife, I'm like, babe, I'm like, this is crazy. I'm like, people are freaking out. I got to get into chat tomorrow morning. I got to just explain to people what this Japanese yen carry trade even means, because 90% of people didn't even know what it meant. They've never probably heard that phrase used before August 5th. So I was like, I got to get in. I got to explain to people what's happening. Most importantly, I'm going to buy stuff. Like for us, like I'm going to buy stuff tomorrow morning because I think it's a really good buying opportunity. So I came into chat pre-market. I explained to all of our members what this meant, what was happening. Why is this happening? What does it mean? Is it as disastrous as people are making it out to be? And I calmed everybody down and said, listen, I'm buying today, right? I said, I'm taking advantage of this 10% down from the all-time high, from July's high. We're down 10% on this gap down. I'm going to take advantage and I'm going to buy stuff. I think this is a really good buying opportunity. And a lot of our members were able to kind of, okay, cool. They calmed down and they went and they bought some stuff on August 5th. And you go ahead and you take a look at what the markets have done since. Well, you got a gap down to 510 on the SPY, and now you're at 610. You take a look at what some of these individual stocks have done. Take a look at CrowdStrike, 200. Cool. Now it's at 380. Amazon, 155. Cool. Now it's at 235. Alphabet, 156. Now it's 198. Meta, 458. Now it's at 637. Apple, 196. Now it's 223. Nvidia, 90. Now it's 147. Palo Alto, 145. Now it's 188. Broadcom, 130. Now it's 240. Like these, Palantir, this was my favorite one. Palantir, $22. It is now 79. Kava, 75. It's now 125. These are all the stocks that we bought. I literally bought all these stocks on August 5th. It was the right move. It was the right move. And just remember that people on social media were telling you that that was going to be the end of the world, that was going to be the straw that broke the camel's back. Was it? Was it the straw that broke the camel's back, or did the market literally go straight up once the market opened? Like those people couldn't have been any more wrong. The market didn't even go down. The futures market went down in the overnight session when the Bank of Japan raised rates. As soon as the U.S. equity markets opened, the market went straight up. They couldn't have been any more wrong. So I'm not buying the fact that now the next time they raise rates, though, that's going to be what's going to I don't think that trade is leveraged as much as it was in August. And the leverage is the killer. Leverage is the killer. I think that leverage got unwound. But we'll see. We'll see. How do you know I'm wrong? If tomorrow the Bank of Japan raises rates and the SPY gaps down to 590, then I'm wrong. Or gaps down to 600. 590 is excessive. Then I'll say I was wrong. There was more leverage there than I thought. But I don't think that's the case. And not because I don't think that's the case, not because I'm always right. I'm not always right. I'm wrong sometimes. I make red trades. I have red days. But I'm right a hell of a lot more than I'm wrong. The moderators and I collectively as a group maintain a cumulative win rate on all of our executions of just around 80%. We track every buy, every sell, every take profit, every stop out, every green trade, every red trade. It's all right there calculated into our win rate for you guys to see for yourself how you would do if you were following along with all the trades that we were executing. We're fully transparent. We are an open book. Everything is right there for you guys all to see. And what matters most is that when you're talking about a win rate, or you're talking about, what our moderators are trading, or what our moderators are alerting, as members, you guys are more than welcome to go ahead and follow along with the alerts that the moderators are making. We tell you where our orders are. We tell you what stocks we're focused on. We tell you what prices we're getting in, what prices we're getting out. We tell you where our stop loss is, where our profit targets are. You guys know all of this before we actually execute our trades. And once our trades do execute, you get a push notification sent to your cell phone letting you know that we're in or out of a particular position. Or if you're in front of your computer and you're in chat, you'll get the notification. Obviously, the push comes through chat, but it also comes through on the mobile app in case you're not in front of your computer. 82% of our members have a full-time job. So it's important that we have a mobile app function like that allows you guys to participate and benefit from what goes on during the day, even though you're not in front of a computer. That's what allows so many of our members to make money, and that's what allows so many of our members to have success. And you shouldn't just believe that our members make money, that our members have success because I just said it. You should believe it because that's what members actually say for themselves. There's no better testament to a trading group's performance than whether or not their members actually make money. That's what matters the most. If you ask me, why should you join your trading group? It's not because I think I'm the world's greatest trader. I've said that a million times. The reason why I should join your trading group is not just because companies like Benzinga, the NASDAQ, okay, are recognizing us for what it is that we are doing with the retail trader, and the NASDAQ, signed a data partnership agreement with us. They actually invited my business partner and I down to the NASDAQ to participate and witness the closing bell. They gave us a tour of the NASDAQ facility. They put our name, our company logo and name up on the LED screen in the middle of Times Square. There it is, actually right there. It was a lot of fun. It was a great moment for my business partner and I to experience that and to get that type of recognition from the NASDAQ. And to get that type of recognition from Benzinga, receiving their chairman's award for best AI analysis tool. Aside from those things on why you should join True Trading Group, you should join True Trading Group because our members are actually making money. And to prove that to you, I'll show you. Members, do me a favor. Members, if you are making money and you're becoming better traders because of TTG, I'd like you to go ahead right now and type the number 1. Go ahead and type the number 1 if you guys are making money and if you're becoming better traders with TTG. Type the number 1 in chat right now. Now, for those of you that are not members, pay attention to how many people you see type the number 1, because this is the reason why you should join True Trading Group. I mean, there's a lot of reasons that I can give you on why you should join. This is the biggest one. All these people are your peers. They're your friends. They're your family members. They're your coworkers. If they're able to do this and they're telling you that if they're making money and they're having success, then why can't you? They don't have more time than you. 82% of these people have a full-time job. So I don't want to hear, oh, I have a job, I can't do this. Cool. 82% of these people have a job. 82% of these people are busy. They have responsibilities. So if they can do this, then so can you. These are your friends and your family members and your coworkers and complete strangers. I'm curious how many people are on this live stream right now that are not members. If you're not a member, type the letters TTG. If you're not a member, type TTG, please. If enough non-members type TTG, I'll do a $20,000 giveaway right now on this live stream to one of them. Go ahead and type the letters TTG. And if enough people do it, I'll give away $20,000 right here on this live stream to one of you. Let's see if anybody actually typed TTG. If enough people do it. James. Andrew. Sean, you're a member. John, I think you're a member. Lissy Travels, okay. That's not going to cut it. I guess not. You guys didn't want a $20,000 giveaway. Sorry, folks. Guess not. You snooze, you lose. All right, guys, let's move on over to what I would like to do here now. Here you go. Now here comes some, right? JR and Melvin, Andrew. Look at them all now. S. Rice, you're a member. AT. Just give you a free membership? No. How about that? Guys, make sure you're watching this video live. So make sure you click the live button down there in the bottom left-hand corner. Make sure you guys click the live button.
I gotta tell you, man. That guy that just made the comment, or woman, I don't know, Alon, I guess is whatever their name is. I'll tell you right now, you offered to do a $20,000 giveaway, and their response was, keep your money, just give me a free membership if you're going to give it away. I don't think that's anything to sneeze at. I think that that's kind of crazy. Do you know the value that they're putting on that?
Yeah.
No.
If I give them a free membership, they have a 100% chance.
I'm not saying that you do give them a free membership. I'm saying that that's something that you shouldn't just cast aside, because I think that somebody's willing to turn down a shot at 20 G's and they're like, yo, just let me get a membership,
Mm-hmm.
I mean, I think that that's probably somebody that eventually you would want in True Trading Group,
Yeah, they just said, I'll make the 20K easy.
Yeah. Can that person send us a text? Joe, put the number on the screen. I really, really like that dude's attitude.
You guys are legit. I watch often. James said I'd take the membership too. James Gwillikers.
Yeah. So, Alon, go ahead and text that number with just put your name in there so that I know it's you, but you'll be talking with me directly. Okay.
You know what, James, you too, because James also said he'd take a membership. So James and
Alon. Why do you have to struggle with it?
I don't know, but how do you pronounce that?
Alon.
Alon?
Yeah.
Alon?
Yeah.
All right. Alon. Alon and James. It's not Elon?
No.
Alon?
Yeah, because Elon is with an O.
Well, yeah, Elon Musk is with an O, but you can spell Alyssa with an I or a Y.
Yo, Alon, can you tell us which one is correct, please?
No, you could be correct. I mean, you probably are correct. I'm just saying that my possible answer is not a bad one
Well, he didn't
or a stupid one.
You left it. Oh, he put an emoji. Could you just tell us which one is correct?
He put an emoji. Oh, he said neither. Neither's correct. See? Screw you, Adam.
All right. Well, I didn't know that the person's name was going to be Elaine. Okay. So, Elon.
Ellen.
No. Tony put Ellen. Is it Ellen?
Wait, it's the E with the. Oh, this is
stupid. All right.
This is bad.
Brother, you show up as Dean in Socio.
Wait, Lizzie also wants a membership over the 20K. Wait, is it Elon? It might be Elon.
No, dog, you're not even. Homie. Elon.
Listen, my sister's an English teacher. I'm about to call her.
Elon. He just said it.
Elon?
Can you change his name? Why is your name Dean inside of our contacts?
Elon. Yeah, see, neither one of us had that one.
We're way better traders than we are.
We are than pronunciators of names. I promise you.
Yeah.
I promise you. Listen, Adam, there's a couple of people that actually said that they would take a membership over a chance at 20K.
Which is crazy.
I think, listen, if there's people on here right now, if you guys are not members and you're on here and you're interested, you would take a free membership instead of a chance at winning $20,000. Look at Burn Network says I take a membership too. Guys, send a text message. All of you that are saying that you would take the membership over a chance at $20,000.
Tell Lucy that not to try and sell any of these people that are texting in, that I'll talk to them directly.
Yeah.
So, and it's actually really, really funny right now. I'm not going to show you the numbers or nothing, but it just so happens that two of the first people that texted in is James Dean.
That's awesome. That's awesome.
Yeah, absolutely nuts. Very funny. All right, no, just keep doing what you're doing, man. You're good. Just go on, give them the goods.
All right, cool. So yeah, so guys, if again, listen. So Burn Network, James, Aylin, if you guys would rather have a free membership instead of a shot at 20 grand, text the phone number you guys see on the screen right now, because you are the exact type of people that we want inside of True Trading Group and that we want part of this community.
And I'll tell you this, do me a huge favor. Look, we're always, for those that don't know me, my name is Adam. I'm an Aquarius. I like long walks on the beach. I have 2 kids. I was recently on, almost about to go on Tinder, but I didn't. I met Mike on Grindr many years ago. But here's the thing. If you send the message and you want the free membership, right? Or you want a membership, because here's the deal. Don't go ahead and send us that if you have $0 to your name. We don't want people signing up or participating with us that are literally, they can't afford to pay their grocery bill. That's not the kind of people, you know what I mean? You got to be somewhat in a position to be okay, because losing is a part of trading. So to think that you're going to get in there and try and trade and invest, and you're never, ever, ever, ever going to take a loss, and you have to turn that $200 into $2,000, or you're going to be screwed. Save yourself the trouble.
Make sure you're in a fight. It's good advice, Adam. Guys, make sure you're in a financial situation to participate in the markets. True Trading Group we're not going anywhere. We'll always be here. So it's more important you get your financial house in order. If you're like, listen, I don't have 2 nickels to rub together. Even if you gave me a membership for $100, I wouldn't take it. Just don't bother texting us. And I would honestly tell you to pick up a second job, a third job, or do whatever you have to do to get your financial house in order. And I'm talking to you, I'm telling you, it takes emotional discipline for you to be good at trading and to have success in the markets. And when you are, when your back is up against the wall and you're like, hey, this is my last $200, I got to turn into 20 grand. That pressure is going to be a little bit too much for you guys to handle. And I don't want to see people put themselves in positions like that. So just make sure that you're in a position to where you are ready to be able to get involved in the markets and to trust the process and go through this and follow the steps and the strategies and the process that we lay out for you, because there's 10,000 members inside True Trading Group. You're led by myself and 8 other professional full-time traders. We know what it takes to be successful, not just obviously from us doing it ourselves personally, but from helping our 10,000 members achieve their goals. We know what works. We know what doesn't work. And you saw how many of our members are successful when I asked, hey, type the number 1 if you're making money. You saw how many people responded to that. So trust the process and make sure that you're in a position to be able to do this the proper way. That's all. So text 1-888-621-2127 if you guys are still interested, if you would rather have a free membership than
yeah, you know what? Let's do this. I'll tell you this right now. I probably am not going to give you a free membership, but the membership that is online right now is normally $22.12. We have a discount for $10.47, right? I'll tell you what, the people that text us today and are seriously interested, I may just hook you guys up with something that will be unheard of. Because everyone's got to have a little skin in the game. You know what I'm saying?
Yeah. I like this. I like where you're going with this. I like this.
So I'm not just gonna hand it to you.
I like this.
But you got to have a little bit of skin in the game. So even if that's just a couple $100,
right?
Have some skin in the game.
I like this.
All right. Let's see how many people are serious.
Yeah, we'll see how many people are serious. Guys, send the text. Go ahead, send the text. We'll hook you guys up with something real special, because if that's the kind of person you are, and you'd rather have a membership than a shot at 20K, you're the type of person we want. But like I said, we're not going to give your membership totally for free, but we'll see if you're serious. We'll do something real special, unheard of, and maybe get you guys hooked up and taken care of with a membership for a steeply discounted price. If you're interested in what that is, you send that text message to 1-888-621-2127 right now. Deal? I think that's a fair trade-off. All right. So send that text, guys. Now that takes me on over to our favorite segment, which we like to call Grade My Stock. Grade My Stock. It's a recent new segment that we started doing on this YouTube channel where I open up the floor. I allow everybody to type in chat ticker symbols. I randomly pick one, and then I will give you a grade on that stock, A, B, C, D, F. A, B, C, D, F. And it's going to be based on a combination of the technical chart setup plus my fundamental belief and analysis and thoughts on the company. I will tell you that this is all 100% my opinion. I could be wrong. I'm going to give you my opinion. A is I love it. I'd buy the stock right now. B is I really like it, but the stock's maybe a little expensive. Wait for a pullback. C, I'm indifferent. D, I don't like it. F, I wouldn't buy this stock with your money. Don't ever ask me about that ticker symbol ever again. Okay, so that's A, B, C, D, F. All right. So why don't you guys go ahead and type those ticker symbols in chat. First one. Robert Lopez says Cisco. I love that you just asked me about Cisco because I got to be honest with you guys. I really do. I like Cisco. And I can't believe that I've been saying this. I've been saying this for the last 2 weeks. I like Cisco. I actually do. I like Cisco. And I can't believe that I'm saying it because Cisco is like the epitome of .com bubble that never recovered. Cisco has never gotten back to its 2000 high. So think about that. Here, this is the .com bubble. That is their all-time high. It's never gotten back there. 25 years later, it's never gotten back. Imagine being the guy that bought Cisco at $80. And here you currently sit, still down 30%, 25 years later. It's crazy. No, not, I'm sorry, not 30%. A little bit less than that. 20%. Crazy. Right? But I think that's going to change. That's going to change. And you know what's funny is that I wrote in my market outlook report, which I publish to all of my members into your trading group. And I will just actually let me, you know what I'm going to do for you guys real quick? I'm actually going to pull up, hold on 1 second, folks. I'm going to pull up for you just the part of my report where I talk specifically. This is annoying the shit out of me. Hold on, guys. All right, I'm going to pull up my report. Actually, I think I know I can grab it from here. This is probably easier. And we'll talk about what I put on. We'll talk about what I. Yeah. Joe. Joe, if you have it readily available, if you can pull up, but I was trying to get the PDF. So if you can pull up the final PDF version, Joe, but only the Cisco part. Just scroll to where I talk about Cisco. So Joe's going to grab it. So the stock market outlook report, just for those that aren't familiar with it, I publish every single year. I publish, and Joe, it doesn't have to be like only. I mean, if there's a couple sentences top and bottom from this, it's fine. You know, you don't have to like only get the Cisco part. I just don't want you to pull up the whole report. Just drop it down onto the Cisco part. I published the stock market outlook report thank you, Joe, for all of our members. It's free. You don't have to pay anything extra for it. This year's report's 24 pages long. I go through my analysis on what I think the markets are going to do this year. I go over what sectors I think are going to outperform, what stocks that I think are going to outperform, what stocks I like. And I recap the prior year's report and talk about what worked. You know, if there's something that didn't work, what didn't work, what am I doing with those positions? What am I selling? What am I buying? And one of the stocks that I actually mentioned this year was Cisco. And here it is right now. We can just kind of, this is directly from my market outlook report. And you guys can see here that these next two ideas are my way of trying to find low valuation growth opportunities in technology. And that's because, and I'm going to talk to you guys about that, my themes this year, the themes that I'm trying to accomplish with the investment strategy that I'm implementing this year is 4 different things I'm trying to accomplish. Number 1, I'm trying to take advantage of what is a deregulation environment from a government policy standpoint. So I want to be invested in things that would capitalize from that. I want to capture growth in what I think is going to be the next phase of the AI revolution, which is not the NVIDIAs and the Broadcoms, the semiconductors, but there's a different phase that I believe is going to be the next profit driver that's going to really benefit in a major way over the next 1 or 2 years from the AI revolution. And I want to be invested there. I also want to identify lower valuation growth opportunities in technology. Valuations are high. Valuations are expensive. The S&P is at 22 and a half times forward PE. That is historically high. You're at a 25, 26 trailing PE. That is historically high. Okay. That is historically high. And with interest rates remaining elevated, I believe that those valuations might come under pressure if earnings don't deliver. So I'm looking for areas where there's growth opportunities, but the valuations are still low. And then the last one is to diversify, and I want to just hedge against what could possibly be a rise in inflation this year. But I would still want to stay exposed to what is the core of an underlying strong economy. Those are my themes for the year. So members in that report got very specific and detailed breakdowns of exactly how I plan on accomplishing those goals and what stocks I'm buying and what stocks I'm selling in order to do that. Let's talk about Cisco, because this says, and what better place to look for low valuation than old school tech dinosaurs? Cisco is a legacy tech company that could finally get back to its all-time high put in during the dot-com bubble. The stock may finally begin re-rating its multiple for more growth if they continue to work closely with networking AI infrastructure. There's been an explosion in the amount of data that has been created by AI, and networks will need to be upgraded to process and move that data around for different enterprises to use. Cisco's international semiconductor solution called Silicon One is becoming a viable solution for web scalers. In fact, 4 different web scalers that are clients of Cisco recently increased their orders by over 100%. So that means they are very happy with what they're getting from Cisco. Now, the PE multiple on Cisco is very low. It is 16 times. You take a look at some of these other tech companies, they're 35, 36, 40, 50, 60, 100, 200 times. Cisco is 16. It's trading at a multiple lower than the S&P 500. And it also pays a 3% dividend. So I felt like this could be a great little spot to hide out if you want lower volatility, you want a little lower beta, you get a 3% dividend or just under a 3% dividend to give you a little bit of a buffer. And there's an opportunity here where with a low valuation, if they get more involved on the AI side, what used to be an extremely boring tech dinosaur that nobody cared about and was just left for dead could start to actually gain investor interest again. And that could see the stock push back up towards its dot-com bubble high. And I do think it's possible that Cisco could take out the 2021 high and start to push back this year into this high 60s, low 70s, and give you a nice little move. So I actually do like Cisco. It was in the long-term portfolio report. The stock is a little extended into that 2021 high. So, instead of me giving it an A, which means I'd buy it right now, I think that you're probably good for an A minus, B plus, and you can buy this thing anywhere inside of this region. And we can look for, any type of a rejection off that 2021 top to consolidate before eventually breaking that and making a push towards your next resistance, which takes you up into the 70s. So I do like Cisco. Interesting that, it was a very long answer, but it was just because it was one of the companies I mentioned in my report, and I just felt that was appropriate to kind of share some of that information with you guys. All right, so let's continue. All right, guys, go ahead. Fire away. Clove. Good gracious. This stock is actually, I didn't even realize this stock did this last year. This stock was such an incredible piece of garbage for 2 years. All right. I'm going to give this a C. The reason why I'm going to give this a C, like a C minus, is because from a technical standpoint, the chart actually looks okay. And if this thing breaks through like 475, it could go to like 6.25. But then I think it's time to, it would be time to get off the trade and count your blessings for everyone that's a bag holder. I would say count your blessings if you get back to 650. I think that's going to be too big of a resistance level. From a fundamental long-term perspective, I don't necessarily like the company. But if it takes out this level here, 475, I think that you could see a trade, maybe a short squeeze that takes you up towards 6.25. And then I would take advantage of that, and I would probably take profits and I would get out. So I'm going to give Clove a C. I'm going to give it a C. Fire away, guys. Keep them going. Amgen. Ooh, that's a good one. That is a good one. Now, I do own Amgen. This is a good one. I'm going to go with Amgen. I'm going with a B plus, A minus. I like Amgen. A lot of these drug manufacturers and biotech companies have got annihilated with the nomination of RFK Jr. to head up the health and services, to be secretary of that department. And you've seen a lot of these companies like Regeneron got pulverized. Amgen got pulverized. Moderna got pulverized. Pfizer got pulverized. All these vaccine-related and biotech company stocks all got pulverized. But one of the things that I really, really like, and this is a hard, fast rule for me when it comes to long-term investing, is, and I learned this from Charlie Munger, Warren Buffett's, right-hand man, God rest his soul, one of the greatest long-term investors of all time, Charlie Munger. And one of his rules was, when I like a company, he will always buy it when it gets to the 200-day weekly moving average. That's a rule of Charlie Munger. I just switched to a weekly chart for you on Amgen. And what you will notice is, since 2016, this yellow line is the 200 moving average. I mean, I'd say that's pretty nice. So I like Amgen. I know it got beaten up there a little bit, but I still own it. I'm not selling it. I haven't bought more, but I like Amgen to recover. They're a great company. They've got a phenomenal pipeline, and I expect them to continue to do well. Pepsi. So here's the thing about Pepsi. Pepsi's not doing well for a couple of different reasons. Okay. Consumer staples have done horribly. The reason why consumer staples have done horribly is because the economy has been a lot stronger than people had anticipated it would have been through 23 and 24. And when people realized soft landing, not recession, everybody started just dumping all the consumer staples names. The consumer staples are companies that have extremely slow growth. They're just stable, cash cows. They pay, solid dividends, and they're places to hide out stocks that have lower betas that would be, less impacted by an economic slowdown, because they're considered defensive stocks, because when the economy slows, consumer discretionary stocks get hit hard. Consumer staples usually hold up better. And that reason for that is because when the economy slows and people are pinched for cash, they stop buying things they don't need. So like they stop buying things they want, and they only buy the things that they need. No matter how bad the economy gets, you still need toilet paper, Tylenol, Band-Aids, Q-tips, Clorox, dish detergent, washer detergent, hand soap, toothpaste, right? Like these are all the things, body lotion, tissues, right? Paper towels. These are all the things that you still need. So food, right? Food, beverages, right? These are things you are still going to buy. What you're not going to do is you're not going to go buy a new car. You're not going to buy a new TV. You're not going to buy a new pair of sneakers. You're not going to go out to dinner 4 times a month. You're going to, that's what changes. So, but the economy has done a lot better than people thought. So consumer staples have not really found a bid. However, on top of that is this shift into a little bit more health conscious on the food and beverage side. This allure of the weight loss drugs, the appointment of RFK Jr., all of these things are making people think that the consumer is going to start to be a little bit more health conscious. And you look at a company like Pepsi, they don't have a lot of products that we would consider healthy. So I think they also got hit a little bit on the back of that. So I personally own Pepsi in my consumer staples and defensive portfolio. I own Pepsi and I own Coca-Cola. Those are the 2 big ones that I own. Solid dividend from Pepsi. I think it's a decent stock to own in the long term, just as a defensive, positioning, and just as a hedge when the economy slows down. I'd say right now the stock's probably a C, just because the economy is strong. Pay attention to these stocks. If they do start to catch a bid, that could be smart money telling you that they're worried about the economy. Like if you were to see quietly like Pepsi do that, then that could be a sign that that investors and smart money, institutional money, is getting a little nervous about the state of the economy if Pepsi starts to do that. So until you start to see something like that happen, I think that it's a C for now. I just don't think that there's hold on one second, guys. Sorry about that. So yeah, so that's that. Those are my thoughts there, kind of Pepsi. And Pepsi's not a day trading stock, right? This is not a stock that you would day trade. It's the movement the moves on the stock are just not large enough. Dutch Bros. We're gonna go with a B. We're gonna go to B. I like Dutch Bros. I really do. Then the stock's a little expensive now. There's a lot of resistance here in the mid 60s. I'd wait for a pullback into the low 50s, and then I'd say take a shot. I like Dutch Bros. I've never actually been to a Dutch Bros, but everyone I talk to loves it. I'm actually, there's two different, chains that I'm bullish on their future, and that's Dutch Bros and Kava. I'm definitely more bullish on Kava than I am Dutch Bros. But the coffee business is pretty competitive with Dunkin' Donuts, McDonald's, Starbucks, obviously. I mean, the coffee, Wawa, Tim Hortons. I mean, the coffee industry the competition is pretty fierce. But people that go to Dutch Bros love it. So as Dutch Bros rolls out to be a national brand, a nationwide brand, which it's not right now, it's regional. I think that there could be a lot of potential there for Dutch Bros. I think there's a lot more potential on Kava. Kava also a regional company right now, eventually will become nationwide and eventually potentially worldwide. Kava is Chipotle, but Mediterranean food instead of Mexican food. So instead of burritos and tacos, it's lamb, hummus, tzatziki, falafel and that kind of stuff. It's delicious. It is exactly Chipotle. Like when you walk into a Kava, it is exactly Chipotle. Like if I just took the Kava logo off and put the Chipotle logo on, you would just think you were in Chipotle. It's the same line set up, same seating concept, same assembly line where you start with the first person, tell them I want a bowl, I want a sandwich, whatever, and they go to the next and you go right down the line. It's exact same. And the kitchen's open. You see them making the food right behind. It is exactly the same. Okay. So I look at what Chipotle did over the course of a decade as they rolled out nationwide and worldwide. And I think, why can't Kava do the same? The business model we know works. The food is delicious. I like the food and the product myself personally. My wife loves it. And every time I go to a Kava around me, and I'm in the Northeast and we have a bunch by me, a lot of people, I mean, every time I go there, it's busy. There's people in there. It's always busy. I've never been to a Kava and it was dead. Just like Chipotle. It's like you've never been to a Chipotle and there's nobody in there. Same thing with Kava. So I think there's a lot of potential there. And that's like a niche area of the market. Like how many fast casual Mediterranean food places that are there? There's not, right? There's really not that many. So from like a big national brands type of thing. And so when you look at coffee, Dutch Bros, you've got some crazy competition. You want coffee, a lot of places that you could, a lot of places you can get coffee from. They just got a bunch of C health ratings. Any concern? No, I don't have any concerns over them getting a C health rating. I just think that, as they're going through a growth phase, Chipotle didn't have great health ratings. McDonald's didn't have great health ratings. I look at some point, right? Their health ratings change over time and you can improve your health ratings or you could, your health ratings could get worse. But that's not the first time that a food place has gotten a C rating. If you look at all of the McDonald's, Wendy's, you look at Shake Shack, you look at Starbucks, you look at, all of these places, right? They don't all have A ratings or like their whole time. Their whole resume is not A. A lot of them have had slip ups. I think that Kava, maybe you see something like that as they try to go through like a growth phase and they try to open up new stores quickly to meet the demand for their product. When you go through that, you may see health ratings slip during those time periods. But that's going to be up to management and how competent management is to focus on that as a top priority to get that health rating back up to help with consumer image of your brand, and I'm hopeful that they're going to be able to do that. And I'm not ready to wave a red flag or sound the alarm, because I got some C health ratings. I would expect that to improve as they try to focus on quality as they go through their growth stage. Now, their growth stage, I mean, yeah, Chipotle is the prime example of a slip up. Chipotle had salmonella outbreak. I mean, there's been a lot of situations with stuff in the past. Or I'm not saying E. coli it was, right? Something like that. I forgot whatever it was, but they had it. They had a huge issue, and people still went. People still went. Paral, there you are, Wells Fargo. Yeah, I don't know what you're talking about, dude. When you say your risk reward, my final take profit was 78. So that's $4, and I was risking $1.30. So I'm not sure what you meant by when you were saying your final take profit was a 1-to-1. I remember you asking that question on the live stream the other day. My final take profit was not 1-to-1. I got in at 74. I got out at 78. Oh, yeah, no, yeah. My stop loss was underneath 73. So 73 was the support level. So you figure I probably would have gotten out 72, 75, maybe 72, 70 is probably the price I would have actually exited the trade. But I was in at 74 and change. So that's $1.30, maybe something like that. Probably on my risk, $1.40 maybe on my risk. But my final take profit was $4 or like $3.75. But you look for a long candle close to stop, not a quick, so it would be a little lower. No, not really. Wells Fargo is not a very volatile stock, so you don't need to really. The room that this is actually really important. This is actually a good question, Pearl, so I'm glad you kind of asked it. The room that I give a stock when it approaches, so I use mental stop losses, right? I don't set a hard stop loss. I get out myself, but I have the discipline to do that. If you don't have the discipline to do that, you're better off setting a hard stop to control your risk. So what I do is I will determine how wide a support level is. Now, if you're trading Meta, Tesla, Coinbase, MicroStrategy, the support level is going to be wide. Right? Several dollars wide. If you're trading Wells Fargo, Bank of America, DraftKings, Roblox, American Airlines, those support levels are a lot smaller, right? Because the stock is less volatile. So once I determine how wide a support level is, I will put my stop loss underneath it. So if I say 73, I'm not actually getting out at 73.00 or 72.99, right? I'll let the stock drop into 73, 72.90, 72.85, and see if it then pops at 73.10, 73.25, 72.90, 72.80, and then 73.50. That's the support level holding. So I would sit there and then if it starts to drift further, 72.75, 72.70, because Wells Fargo is not very volatile, I can keep it tighter. I don't need to give it $1, right? But if I was trading maybe AMD, something a little bit more volatile than Wells Fargo, I need to give it more room. And maybe I give that $1. But my position size would be adjusted for that. And my risk reward would be adjusted for that as well. But the point is that trade was well over a 2-to-1. The final take was more like a 3.5-to-1. So it was a good trade. It was a really good trade. Does that answer your question? Because I feel like you might have, maybe you didn't realize where my stop was, but does that answer your question? Does that make sense, Pearl, or is there still something you want me to hit on? Oh, my pleasure, dude. My pleasure. No, I appreciate that. My pleasure. That's a huge part of trading. Like it's our job to determine how wide a lot of people think support and resistance is like one price. It's not. You can't say support is at $50 and stop out at $49.95. Like support and resistance are zones. They're areas. And it's our job to determine how wide those zones and areas are. And depending on the volatility of the stock, the wider the level. I teach people that stuff, as members, obviously. If you're not, if I'm talking to everybody, if someone's not a member and you're like, well, how do you do that? That's stuff that I can't do that right now in a live stream with you, but that's stuff you'll learn as a member. All right. Is WFC more bullish than JP Morgan long term? Oh, I don't know about more bullish. I mean, JP Morgan is by far the best in breed of all of the US banks. I know Wells Fargo has potential here with the asset cap being lifted. I am bullish on Wells Fargo, but am I more bullish than JP Morgan? I mean, maybe Wells Fargo does better on a net percentage basis because the stock has not had as big of a run as JP Morgan lately because that asset cap has really held the stock down. But they recently just broke out to new all-time highs. Like you guys can see these all-time highs that were put in place here. So 2018, this is actually when the asset cap was placed on the company. And then you had the COVID crash. So since the asset cap was placed on the company in 2018, they haven't been able to break that cycle high and get back to their all-time high from the prior all-time high that was put in back there at the very start of 2018 until literally last year. Last year they broke above it, and now you've been trading above that level. So I think that Wells Fargo is a buy anywhere in the 60s because of this previous resistance level that's been in place since really 2015. So you can see this level here that, I mean, you broke above, it's a clean break. So I look at this and say, this stock, I think goes higher over the next couple of years. You have a deregulation environment that should be good for financials. You've got the asset cap being lifted on the company from the regulatory action that was taken against them for their company, opening up fake accounts and unauthorized accounts for customers. And there was consumer abuse, and they put a restriction on the amount of assets that the company was able to hold at 1.95 trillion. So since 2018, the company's not been able to take their assets above 1.95 trillion. That is set to expire this year, this summer. So if that expires this summer and the company then can take their assets to over 2 trillion, that's more money that they can actually lend out with mortgages or auto loans or small business loans or credit facilities, whatever, to actually generate more income with the interest that they will get back from having those assets. So I think that there's a lot of potential there for Wells Fargo to play catch up. Now, does that mean I would sell JP Morgan to buy Wells Fargo? No, it means I like both. And you guys want more information. Listen, if you guys are not members and you guys are looking for more analysis and information like this and some trade ideas, go ahead and join our trial. Our trial is 7 trading days. You get 7 trading days with myself and the other moderators. Participate, ask questions, talk to members, talk to the mods. Go to ttgtrial.com. Again, that's ttgtrial.com. Enter your name, email, your phone number. Click yes, I want this. Fill out the form, pay the one-time payment of $3 and get your butt in chat. Trade with us. Let's make some damn money together. It's a one-time payment of $3. There's no automatic renewal. There's no recurring payment. There's no upgrade to an annual membership if you forget to cancel. We don't play any games like that. It's a one-time payment of $3. You've all spent more than $3 for a cup of coffee at Dutch Bros or McDonald's or Dunkin' Donuts or Starbucks. You've all spent more than $3 on coffee. That coffee has not made you any money. This actually could. We charge $3 to make sure that you're a real person. There are thousands of people in our chat room at any given moment during the day with one goal: make money. They're focused on that. I will not jeopardize that by having people come in and be distracting and being disruptive and preventing people from reaching that goal. So by charging you $3, it just ensures that you're a real person. You're putting your credit card information in. You're serious about this. And if you're serious about this, we're serious about having you as our guest. So go to ttgtrial.com. The weekends and holidays don't count against your 7 days. You get 7 full trading days. Okay? 7 full trading days. That is ttgtrial.com. Okay, ttgtrial.com. And can you guys do me a favor, members and non-members? Are you enjoying this live stream? Are you enjoying this content? If you are, make sure you are subscribed to this channel. Smash that like button on the stream. And when you're done, type the number 7 in chat. I'll wait. Smash that like button. When you're done smashing that like button, type the number 7 in chat. I'll wait for it. If you guys are if you enjoy these live streams, if you enjoy this content, if you enjoy this material, if you enjoy the analysis, if you want me to keep doing more of this, type the number 7 in chat right now after you hit the like button. Show some love. Make sure you're subscribed to the channel, guys. If you're not yet subscribed to the channel, make sure you are subscribed. And like I said, smash that like button and show some love. And then type the number 7 when you are done. There we go. There's all my 7s. I appreciate you all showing the love. Thank you very much. Excellent. You guys are the best. Thank you, thank you, thank you. Showing some love. Good news. I'll keep doing them since you guys like them so much. Join that trial, guys. ttgtrial.com. Get your butts in chat. Let's make some money together. Also, and remember, you guys have any questions, text us 1-888-621-2127. Have a wonderful rest of your night. Hope you guys enjoyed the live. Subscribe, smash that like button, and I will see y'all later. You know what? Also, before I go, real quick, guys, before I go, anyone else that's interested in a membership, normally the price is $2,212. It's actually for sale right now for $1,047, but don't buy it online. Right now, send a text and let us know why you would want to join. We might have a special deal for you. If you're on this live stream, don't buy the membership now yourself. Send a text message to 1-888-621-2127. The number is right there on the bottom of the screen. And let us know why you want to join.
Yeah, and Teresa, Dean, Sam, and Brandon, who messaged us and then threatened me in Hawaiian, which I didn't even think they were violent people in Hawaii.
Not very nice. Why do you threaten?
I don't know.
It's messed up.
And then also Burn Network and James. You are actually talking to me. I'm the one you are talking to. Okay? Just want to make sure that you know that. All right, thanks.
Yep. Awesome. All right, folks. So there you go. All right. So text us. Like I said, 1-888-621-2127. We might have a special deal for you. If you want to join, let us know why you want to join. And we might do something special for you guys. That's 1-888-621-2127. Thanks a lot, folks. Thanks for tuning in. Hope you guys enjoyed the live. We'll be back at it again. As always, have a wonderful rest of your night. Take care, folks.